All right, ladies and gentlemen, let's get into this video. Quick government risk disclaimer. Trading is very risky. You can lose a lot of money. The information that you are getting ready to receive in this video is for educational and entertainment purposes only, to educate you more on prop firms such as EA markets. If you're going to make any investments in any, trading companies, prop firm companies, please make sure to do it at your own risk and understand that trading is risky and you can lose a lot of money. Okay, let's get into this video. I'm going to be talking about my trades from Friday. You guys, this is my series to getting funded with EA Markets one-step account, right? I have a $100,000 one-step challenge account with EA Markets right now, and I'm going to take you guys through my trade, which you can see right here from Friday, right? Now the price is going to be a little bit different because I do use a future chart to mark up my charts. So you guys may notice that the price is different as I jump from Trade Locker, because that's what this is right here. This is Trade Locker, the platform that I place the trades on, and then the platform that I mark the trades out on is TradingView, right? So this is TradingView. So let's get straight into this video today, you guys. I'm going to try to make this one as quick as possible. Just Friday, I feel like Friday I kind of, I don't know. I feel like I didn't really do as well as I did, as well as I wanted to, because I didn't really keep things simple. This is the 1 minute chart, you guys. As you guys can see right here, this is 9:30 candle right here. So as the price opened up, we had a sweep of liquidity. We dropped below our midnight opening price, right? That's what this yellow line is. Now, this is something that I usually would buy, but I was just trying to be patient. As you guys can see, the market had just opened, and I talk about this all the time. I try to wait at least until, after the first 30 minutes of the day, because the first 30 minutes of the day is the opening range, right? That's the opening range. Some people say it's the first 15 minutes of the day, but no, it's actually the first 30 minutes of the day. And I'm going to show you guys why here, right? So I miss all of these buying opportunities right here. If we go to the hourly time frame, you guys can also see that there was a 1 hour order block in here as well. So the market dipped down, in the morning. That was really just a textbook buy, to be honest. And then we had a continuation all the way up, you guys, pretty much for the rest of the day. And we even left on a 1 hour time frame. We pretty much had a breakaway gap in here. The market did come back down and tested just a little bit, but then it kept going up for the rest of the day, right? So the reason why I pointed that out is because I'm going to show you guys the trade that I took and the reason why I took the trade. So if you go to the 30-minute time frame, this candle right here at 9:30, from 9:30 to 10, this is going to be your opening range, right? So essentially what I did was, because I missed all of the buys, right? I need to throw that out there. I missed all of the buys. The buys was much simpler, but I was expecting at least a bit more of a pullback than what we seen. I did see this 1 hour order block and everything, but I at least wanted it to come back and sweep liquidity one more time, but it never did that. So me being a degenerate and pretty much having to find a trade one way, and I did, and I was pretty patient, when I was waiting for my trade setup, right? But essentially what I did was I measured out this candle right here. This is the first 30 minutes of the market open from 9:30 to 10. I measured this wick out from low to high, and then this is going to give you a range, right? So what I was doing initially was, as the market went up here, I was thinking, okay, maybe it don't want to get to this range, this standard deviation, right, of one, right? This one standard deviation. Maybe it don't want to get to that, right? So what I started to do is, as the market was climbing up, I started to take some short positions, because with the ideal of, at least maybe we get back into this 1 hour, fair value gap, or we could just even go much lower than that. But really, I was just thinking about the 1 hour fair value gap, because we did break past these daily highs up here, and typically sometimes you will see like a break. Whenever it break out a daily high, you will see a break and then retest, right? So I was pretty much selling with very small expectations, you guys. And then we're going to, and then also before I drop back into the 1 minute time frame, look at how when you measure this 30-minute, right, the first 30 minutes of the day, look at how a price literally went to this deviation, right, which is like a take profit area, and then sold off as well. And I did see this during like pretty much the end of the day, but I just didn't want to trade it because it was just so slow, you guys. It really wasn't the best day to trade. But the reason why I'm showing you guys this is because you can use this method to find your take profits, right? Once you figure out the range, the first 30 minutes of the day, and then you figure out where the market is going to go, you can do this whether it's going up or you can do it going down to figure out where you want to, what you want to target, right? So that's pretty much what I was doing. So let me drop you guys down into the 1 minute time frame so you guys can see what I was looking at in real time. So this was the trade right here. As the market was going up here, you guys, I was pretty much taking sales, and I will admit that it was a tad bit risky. But as you guys can see, if I'm taking sales from 24,100, and then this line right here is 24,125, that's only like a 25, 30 point stop loss. So that's the reason why I felt comfortable taking the trade. And then eventually we did get a nice little breakdown. And right here, I'm glad I didn't really add to the trade too much because I was up some decent profits in here. But I didn't really add to the trade until we got this pullback right here. And, and then I got another sweep to the downside. And then that's when I pretty much took profits, you guys. So, and I was glad that I took profits because as you guys can see, this is really choppy. Every time we come down, we come right back up. Came down, broke a low, came right back up, right? So I was glad to get out of that trade and just take the profits and take what the market is giving me. Also, what I was looking at as well is that, these breakaway gaps down here, it just wasn't being touched at all, right? So honestly, if I wanted to just get back in for a buy, I probably could have done it. I actually even thought about doing it, but I didn't want to just be a degenerate, especially on a Friday. I didn't want to like try to push it too hard. I had made a profit, made somewhat of a sketchy trade, but it ended up working out. So I just wanted to get out of that market, right? So, but whenever you see that this market does something like this, right? It broke below. We remember it also went into that 1 hour order block, but we on a 1 minute time frame right now. But we broke below this yellow line, which is the midnight opening, and then right after 10, right during the trading hours that I like to look for, you see we get a little fake breakdown here, and then the real move came right here, and then once you see this, now obviously once you see this breakaway gap and you see it get respected right here, you could take a trade from right here and put your stop loss right there, right? It's going to be a very tight stop loss. So if you're wrong, you're not going to be hurt that much. But if you're right, and this is something that I should have did, to be honest. That's why I said, like, honestly, I wasn't really keeping it simple Friday because I thought the market wasn't going to keep it simple. So it's crazy how when I'm trying to keep it simple, the market don't want to, keep it simple. But when I'm overthinking, the market keeps it simple, right? That's pretty much what happened today. And if you was targeting this one standard deviation, that would have been almost a 5-to-1 risk to reward. But even if you're targeting this one, very small target, that's still a 2-to-1 risk to reward, right? But you have to use this breakaway gap as a stop loss, right? Something that I wish I would have did because I could have caught that move going up. As you guys can see, it was still very slow. Wasn't the sexiest move, but it was textbook. So sometimes it don't have to be sexy. Sometimes it just have to be textbook, right? This trade right here was a bit more sketchy, I must admit. I was kind of like doing this with the idea of maybe it was a power three, like accumulation, manipulation, distribution, because I was thinking, what if we don't get all the way up to this one standard deviation? The market could see a nice retracement, which it did, but obviously it didn't really hold up, right? And I pretty much used, my ability to read price, right, using ICT concepts to get out of this trade, because if I'm going to want to hold this down for a bigger move on the sell, once it makes this little gap right here, I want to see it just keeps going, right? I want to see it keep going. The moment it starts to stop, right, it stopped pretty much right here There was a 2-minute order block right here. Let me show you guys. It stopped right here, right? This was a 2-minute order block. So once it stopped right there, I don't like that at all. So it pulled back against me. I wasn't able to get out the trade quick enough because I was looking at this in real time and I wasn't really looking at it fast enough. But once it pulled back, I figured we may get one more pullback. And luckily we did. And that's when I took profits and got out of that trade before it was too late, you guys. So that was pretty much the trade for Friday. Nothing really too special. Just trying to show you guys, every video I'm trying to pretty much show you guys how I use breakaway gaps, the reason why I use breakaway gaps. Pretty much everything that I use. You guys can see I use the midnight opening. This is the new day opening gap. And I use the first presented fair value gaps, right? I don't really put too much other stuff on my chart. And obviously I use the opening range to figure out a good take profit area, and try to figure out where the market could possibly go, right? So you guys, that's the video. I appreciate you guys for tuning in and joining me on this series of getting funded with my E8 Markets one-step account. Make sure y'all run up this, just run up the likes, man. Y'all haven't been running up the likes for me. And it's been hurting a little bit right here, man. Like right here. I thought I had a community of bros, community of people who was rocking with me. But every video I'm only getting like 2 likes, So the goal for this video, you guys, can we at least get this video to 10 likes, y'all? 10 likes. That's all I want. 10 likes, right? So if y'all could do that, I would greatly appreciate it. And yeah, I'm gonna catch y'all in the next video, man. I'm about to work on some crypto videos right now, some price prediction videos, you guys, because I really want my audience to be educated on crypto so we don't miss these golden opportunities that's going to unfold real soon, I believe, at least within the next 5 years, you guys. So appreciate you guys for tuning in, and I will see y'all in the next video, man. Peace out.